Hello guys, welcome to our channel. Today we are going to see about accounting equation problem number 1.
Today we are going to see about the problem number one, that is in accounting equation. Analyze the effect of each transaction on assets and liability. Show that the both side if it the both sides like asset side as well as liabilities. We have to show the transaction. Introduce cash rupees 1 lakh and furniture 5,000 rupees. The company is introducing the cash, that is 1 lakh rupees, and furniture rupees 5,000 rupees while commencing on the business. No, while the company is commencing the business on that day itself, they are introducing the cash as well as the furniture, that is 5,000 rupees. Then they are purchasing machinery from BEL on credit. They are purchasing an asset on credit base. They are not fully paid, or like half some of the amount they not paid. They are purchasing on credit. It is full amount the machine value of the machine, full amount is in credit, that is 50,000 rupees. And then deposit rupees 10,000 into bank account. From they are opening an bank account. The company is opening an bank account. While opening an bank account, they are depositing 10,000 rupees from the cash. From the cash they are depositing 10,000 rupees. Then paid cash to BEL 50,000. 50,000 rupees they are paying to BEL. Why they are paying? Because while purchasing the machinery from BEL, that was on credit. They have not yet paid the credit still, so they have paid the company is paid the cash to BEL. Then purchased goods of rupees 8,000 rupees for cash and 5,000 rupees on credit from Ramesh. So they are purchasing 8,000 rupees. They are purchased for cash. For cash base they are purchasing 8,000 rupees. Then on purchasing of goods, that is 8,000 rupees of cash, and credit is 5,000 rupees. So what would be the amount for the uh, what would be the amount they have paid? We don't know what was the amount. So the purchased goods is 8,000 rupees, and the credit was 5,000 rupees. If we minus this both, we would be getting 3,000 rupees. Only we are paying 3,000 rupees to the supplier. So next, goods amounted into 5,000 rupees was sold for cash, then 6,000 rupees on cash basis. They have sold 5,000 rupees on was sold for cash, then 6,000 rupees was on cash basis. So the 5,000 rupees goods was sold for 6,000 rupees, so 1,000 rupees would be the profit. Goods costing rupees 4,000 was sold for 6,000 rupees on credit to Sanjay. Goods like 4,000, the cost of goods that amounted for 4,000 rupees, the company have sold to Sanjay for 6,000 rupees. So 2,000 would be the profit for the company. Then issued a check to the supplier of the goods, that is 3,000 rupees. 3,000 rupees they have issued. They are paying at last, at the end of the thing, they are paying 3,000 rupees for the Ramesh, who is a supplier. He is the supplier. We are purchasing from him. He becomes the supplier for the company. So we are paying to the Ramesh the remaining amount to Ramesh, that is 3,000 rupees we are paying. The balance amount we are paying, we have already paid 3,000 rupees. So 3,000 plus 3,000, it will become 6,000. What would be the amount remaining? Still we have to uh, pay to the supplier. That is, the amount, the purchase goods amount was 8,000 rupees. Then the amount we have already paid is paid was 3,000 rupees. That was 5,000 rupees. Then now we are issuing a check, that is 3,000 rupees. We are deducting that also, it is 2,000 rupees. The remaining, the still there is a remaining of we have to pay still 3 2,000 rupees to the Ramesh. Now let's see the solution. In the question, they have said, in the first one was, introduce cash rupees 1 lakh and furniture rupees 5,000. Let's see the solution. So while introducing the cash, that is 1 lakh, and furniture was 5,000. So why I have already said that whatever we are investing on the company, that while commencing the business, that amount will become the capital for the company. Okay, let's see the how much would be the amount for company. There is no liability while commencing the business, so the liability is 0. 1 lakh plus 5,000, that is 1 lakh 5,000. The total amount is 1 lakh 5,000. Let's see the answer. Total is 1 lakh 5,000. Then this side also capital is 1 lakh 5,000. This is 0. If we add this one both, we'd be getting 1 lakh 5,000. The next, they have purchased machinery from BEL on credit rupees 50,000. They have purchased machinery for credit, that is rupees 50,000. We have to write in liability side, that is rupees 50,000 cash. We are not deducting any amount, so has the same we have to write. Cash 1 lakh and furniture is 5,000. Machinery that we have bought, that was 50,000. Then capital amount would be always same, that is 1 lakh 50,000. And BEL on credit base only we are taking, we are purchasing the machinery, so we have to write in liability side, that is BEL 50,000. The total amount is 1 lakh 55,000. Let's see while if we are getting a what. 1 lakh plus 50,000 plus 5,000, that is 1 lakh 55,000. If we add both, if we add this both also, will be getting 1 lakh 55,000. The third, deposit rupees 10,000 into bank. Deposit rupees 10,000 into bank. We have the bank deposit rupees 10,000 into bank. So while commencing the business, they have introduced the cash, that was 1 lakh. Then they are depositing into bank. So the amount they are taking from the cash account. So what we have to deduct 10,000 from cash account, that is cash account was 1 lakh. Cash account was 1 lakh. Then we are depositing 10,000. So to bank account, that would be 10,000 rupees. What would be the balance for cash account? That is 1 lakh. minus 10,000, that is 90,000. We have to 90,000 is in our cash account. Let's see. Cash account is 90,000. Then furniture account is 5,000. Machinery account is 50,000. Then we are introducing new, that one is bank account. We have deposited 10,000. As I said, that capital would be 1,05,000. Then liability would be BL BEL, that is 50,000. As we are not paid still yet, so yeah, we are taking it down also. What would be the total? If we add this all, we would be getting 90,000 plus 5,000, then 50,000 plus 10,000, that is 1,55,000. We got 1,55,000. Then capital is 1,05,000. Then liability is 50,000. If we add this both also, again we are going to get 1,55,000. The next one, paid cash to BEL rupees 50,000 rupees. We are going to pay for BEL. So what would be we are paying in cash, that would be we are deducting from the cash account. What is there now with us? We have 9 cash is 90,000 from after depositing into bank account, and we are having 90,000. So cash is 90,000. Then we are paying to BEL, that is 50,000. Fully we are paying. We are not keeping a we are not keeping any uh, some amount of credit. We are fully paying to the BEL. So 50,000. The cash account will become 90,000 minus 50,000, that is 40,000 would be the cash account. Will be have the cash account, we would be the company would be having 40,000 as cash. If we see now, cash is 40,000, then furniture is 5,000, machinery is 50,000, bank account is having 10,000, capital, as I said, always it would be for 1,55,000. Then we have paid the liabilities, so if there is no another liability, we will be considered as zero. If we add both also, we will be getting 1,05,000. Then goods goods, the purchased goods of rupees 8,000 for cash and 5,000 on credit from Ramesh. Okay, as I said, we are not fully paid the credit amount. We are paying some kind of amount. We are going to pay some amount, that is as already I said, we have purchased 8,000 rupees of goods, and the credit amount is 5,000 rupees, and we had paid, like we had paid only 3,000 rupees, not the full amount. We have to pay still 5,000 rupees. So and the cash account, like cash account was having 40,000 rupees. The cash account was having 40,000 rupees. The purchase goods material paid was 3,000. 3,000. So we have to deduct it. We are paying in cash. We are not paying in bank account or checks. We are paying in cash. we have to deduct it from only cash account. If suppose it is mentioned that we are paying in check, that then we have to deduct it from bank account, whatever the amount is there. Then suppose we are paying in some other, instead of giving uh, giving in cash or checks, or we are providing any other materials or something, we have to check with further things also is there. So the 40,000 minus 3,000 will become 37,000. So we in the company is having 30,000 rupees as cash. 30 cash is 30,000 rupees, furniture rupees 5,000 rupees, machinery is 50,000 rupees, bank account is having 10,000 rupees. After adding all this, we are getting 1,10,000. Then we are having a new liability, that is Ramesh, for purchasing of goods, and the credit amount would be 50,000. For 8,000 rupees we have purchased and 3,000 rupees we have paid. Then after paying 3,000 rupees, we from the supplier we are having 5,000 rupees we are having as a credit, so it comes in a liability. It is 5,000 rupees is liability. Then while adding both, we will be getting uh, liability as well as the capital, we will be getting 1,10,000. Goods amounted into rupees 5,000 was sold for cash, that is 6,000 on cash basis. So the amount of goods that was 5,000 rupees, we are going to the company has been sold for cash, and for that was 6,000 rupees on cash basis. So we would be getting profit. How we are going to get profit? See, 5,000 rupees goods we have sold. Then for that we are getting 6,000 rupees, we have sold for 6,000 rupees. So while deducting that 6,000 minus 5,000, that is 1,000. 1,000 is profit for the company, so we have to add that amount to the capital account also. Let's see, cash account. Cash account is 38,000. How it came 38,000? You can ask, like, in the previous in the fifth in the transaction, that was 37,000. Cash became 37,000. See, there is a profit for 1,000 rupees, so we are adding that 1,000 here. So 37,000 plus 1,000 of profit, whatever we have sold goods, that will become 38,000. Then there was a capital called 1,05,000. So while adding this also, 1,05,000 plus 1,000 will become 1,06,000. So we are not paid, or we are not still yet paid the 5,000 rupees liabilities. Then what would be the the uh, account comes into assets? That would be cash account is 38,000, then furniture account is 5,000, machinery account is 50,000, bank account will be 10,000, then stock will become 8,000. So while after if we add this all, we'll be getting 1,11,000 rupees. Let's see, 38,000 plus 5,000 plus 50,000 plus 10,000 plus 8,000, that is 1,11,000. So if we add this both also, we'd be getting 1,11,000. The next thing, goods costing rupees 4,000 was sold for 6,000 rupees on credit to Sanjay. See, in this question also we are getting profit, because 4,000 rupees of the 4,000 rupees of costing goods was sold for 6,000 rupees. 6,000 rupees we are going to sell for Sanjay. Here 6,000 rupees minus 4,000 rupees, we will be getting 6,000 minus 4,000, that is 2,000. 6,000 plus minus 4,000 will be getting 6,000 minus 4,000, that is 2,000 rupees we are getting that as profit. So the account comes into cash account, that would be that was on credit, so we are not, he is not paid still yet. See, cash account is 38,000, he is not paid to us, that would be become 38,000. Then furniture account is 5,000, machinery account is 50,000, bank account is 10,000, stock is 4,000 rupees. So 4,000 rupees stock we have sold. Okay, so we have sold 4,000 rupees stock. The balance stock account balance would be 4,000 rupees. Then Sanjay would become our debtors. He debtors are the who has to give the cash to us, so he becomes the debtors. He wants to give 6,000 rupees to us, because 4,000 rupees goods we have sold to him. He has to give us 6,000 rupees. Then capital is 10, 1,08,000. You can ask me how did this cash capital account become 1,08,000 rupees? Because 2,000 rupees is profit for us. Of, while selling the 4,000 rupees cost of goods to Sanjay for 6,000 rupees, I showed you just now, that is we are getting 2,000 rupees as profit. So we have to add to the capital account, that is 1,08,000. Ramesh account will be same as I said, we have not still yet paid, so it is 5,000 rupees. If you add all this, we will be getting 1,13,000. 38,000 plus 5,000 plus 50,000 plus 10,000 plus 4,000 plus 6,000, we will be getting 1,13,000. If you add capital plus liabilities also, we'll be getting 1,13,000 itself. Then there is issued a capital to the supplier of goods, that is 2,000 rupees. So only we are issuing 2,000 rupees. We are from the bank account. So the transaction for the asset account would be, cash account is 38,000, furniture is 5,000, machinery is 50,000, bank account becomes 8,000, because we are issuing check. Check, we have the from the bank account we are issuing check to the supplier. Then 2,000 rupees we are issuing, it becomes 8,000. Stockholder will stock would be 4,000, debtor is 6,000, then capital is 1,08,000. As well as we are paying only 2,000 rupees for supplier, so the remaining balance for him is 3,000 rupees we have to pay in future. What is the amount total? That is total is 1,11,000 rupees. Then capital account is 1,08,000, then 3,000 rupees.
Like our channel, subscribe to our channel, click on the bell icon, and then share this channel to your friends.